live now, Jan.
Morning, everyone. Jan Russell here, Executive Chairman of Damstra, and I'd like to welcome you to our Investor Day, which will go for approximately 2 hours. The reason we're holding it today is over the last 6 months or so, I've had a number of investors speak to myself and Christian saying, your platform and your products are moving at such a swift pace, you're spending more in R&D, and how is your product and platform position itself for the next couple of years. We've also had a number of shareholders, investors ask us about what's happening in North America. So when we put those two things together, we thought when we published our Q3 results, which we've done this morning, that we thought we'd have this Investor Day for 2 hours to talk about a number of issues, those two in particular. I am delighted. I think we've got about 80 people that have joined us today, so it's good to see so many investors online and to hear our story. From a procedural matter, I will say that today's Investor Day is recorded, and this will go up on the ASX after the completion of our Investor Day, which will go for about 2 hours. As I said earlier, we've just published our 4C and Q3 results, and also the Investor Day presentation pack on the ASX. So for those who want to look at that separately while we're talking, please do so. I will say we're very pleased about our Q3 results, and Christian will go over that in some detail. Another benefit of having Investor Days, apart from hearing myself, Christian, and our CFO Chris Scholes talk, great to have some executives present on Damstra. We'll have Christian obviously is on the phone, and he'll talk about our Q3 results. We have Katja, who's Head of Products and Marketing. We have Bryce from the US, who'll talk about North America. And Chris Schultz, our CFO, will also be able to answer questions later in the day. I also would like to welcome Tim Davis from Workday. He's one of our 4 North American advisory board members, and he's actually worked at Workday since 2006. I think he told me he actually worked for them before they actually had any revenue. So we'll have a bit of an open fire discussion with Tim later in the session, but we'll also open up the session to Q&A. On another procedural matter, we are using Zoom today, and just to manage the day properly, we'll use the Q&A button on Zoom. So please don't wait to the end. You can ask questions while you're going on, while the presentation's going on, and then we'll leave questions to the very end. So just to recap on the agenda today, Christian will talk about the Q3 results. We then will pass over to Katja, who will talk about our product positioning and enterprise protection platform. I'll then hand over to Bryce, who'll talk about our North American strategy and also sales process. And then we'll have a discussion with Tim Davis about Workday and his perspective on Damster and what's happening in North America. I will make one last point. We've spent a lot of time on our product strategy, and you will hear words like protect your world, which you see in the front of the slide in front of you, and also what we're calling our suite of products, our enterprise protection platform, PPP. So that's the type of language we'll be using future, not just for investors, more importantly for clients. That's the language we're using with our present and new clients, and it's so far been very positively received. So on that note, I'll pass over to Christian to talk about our Q3 results.
Thank you very much, Jan. And as Jan said, thank you for attending. And we look forward to going through the presentation today and bring everyone up to speed with not only our Q3 results, but where we're going with the platform and the success we're having with that through all the hard work happening behind the scenes. Very pleased with the strong quarterly performance, significant revenue growth, record ARR, and higher margins and increasing users. So to cover off on that, 66% revenue growth versus Q3 FY20, 92% recurring revenue, nice and level there, same period. 33 million exit run rate ARR versus 17 million back at March 20. 81% gross margin versus 67% in March 20. So we're continuing to see that increase in gross margin coming through, which is leveraging the business structure that we've been able to put together, not only through the Bolt acquisition, but previous acquisitions and all the leverage of our workforce around the globe that we use on a daily basis. 20% Ebitda margin year to date versus 15% at March 20. 26.5 million in cash receipts versus 20 million at March 20. An increase in clients, 674 clients versus 317 back in March of 20, and over 85,000 users from Q2 financial year 21. So look, fantastic set of results. We're continuing to recover from that slowdown during the COVID period. We're seeing a lot more activity in the marketplace, and we're really pleased with how the business is performing through this period. Over on this next slide here, Q3 saw a continuation of growth across all key metrics. So ARR, this is the time we've actually reported on ARR as an exit run rate from a period. As you can see there, Q3 FY21 versus the same quarter in FY20 is up 98%, showing that continual growth and that continual growth in the right direction. Increase in cash receipts, 26.5 million versus 20 million same period last year, and re-accelerating the growth in users. So those graphs really do show that trend of a flat period due to those COVID-19 lockdowns. We acquired Volt, and now we're getting that re-acceleration as we come in off the back of COVID and things start to return to normal, not only in Australia, but in a number of other regions around the world now starting to return to normal, which is great to see on so many levels. Our growth strategy hasn't changed. We have multiple growth options driven by different strategies and routes to market. Obviously, our organisational resources are designed to implement that strategy. So we continue in different geographies, including North America, UK, and Australian construction. In North America, we have a strong pipeline of material opportunities in existing and new verticals. We've still got large opportunities, not only in resources, construction, but also in white-collar businesses like recording studios and the like. So there's a lot of real opportunity at them. We're waiting on that commercial decision, which we're told will be made this year. So just around the corner for us on that opportunity made in Q4. Scale is greater than 10,000 users. The trials are going extremely well in the UK, but that's not the only opportunity there. We have another couple of opportunities we're working on right now, and we are starting to see a lot more interest and a lot more movement in that market space as COVID gets better in that region. So that's certainly one of those areas that we're very keen to follow and keen to push through as things grow. Australian construction, of course, we have increasing user numbers due to the infrastructure investment off the back of COVID, and we see that continuing for many years to come. As you know, a lot of our customers are in that large construction field. So the CPBs, the John Hollands, Lego Rooks, those types of companies who are doing long-term construction projects, and as quick as one project completes, 2 or 3 others open up. So it's great to see that increasing on a daily basis. Of course, verticals, healthcare and aged care. We see mobility scale and plenty of new opportunities there. Seeing a lot of interest and a lot of success with obviously Solo, Damster Solo, and being able to really track that. And we'll talk more about Solo a little bit later during the live demonstration with things like Solo Drive as well as the wearables. So a lot of real positive opportunity there. Agriculture, we're still working on a New Zealand really untouched by technology. So we're working extremely hard with different organisations to try and implement that. Ports, of course, across Southeast Asia, from the success that we've had there with Keppel, we're working with a number of ports there now to see how we can increase our rollout of our wearable technology to keep people safe across those ports, working on those ships and in those dangerous industries. So really, really interested in where that's going. And of course, our products and channels. In our products, we've got our workflows. We've been piloting workflows, our ERP level for our clients. We're working extremely closely with a number of clients with our workflows in our paperless form system, to make sure that they're able to do all of their documentation electronically and have it flow back into all of the different systems that they use and that we have available to them. And we'll demonstrate some of that later today as well. Of course, our channel partner strategy remains an extremely important part of our business, with over 40 partners now targeting 12 industry verticals. It's really important that we continue to drive that strategy, and we have, of course, Dave Moylan and John Mattei looking after our channel partner strategy, and that's going extremely well. And we're starting to see more and more leads and more business come in through those channel partners. We want to continue to grow across every region of the globe. Small, medium enterprise clients, continual expansion into the mid-market. It's not an area we've done a lot of business in the past, and we're seeing an increase in that area. We've done a lot of work in our product to make it more suitable for the SME enterprises, and we're continuing to drive that growth strategy as we move forward. So some real opportunities there in the coming periods. A lot of positivity in the business, a lot of great things happening, and off the back of a good set of numbers, we're looking forward to the future periods. Jan, I'll hand back over to yourself now.
Thanks, Christian. I've had a number of questions come through, so please keep sending those. I've had some from Josh and Ted and AG, and we will address all the questions at the Q&A session. I will pass over to Katja. She'll talk about our product positioning over the next 12 to 36 months under the badge of EPP. After Katja, Christian will actually do a live demonstration of all our products. I'm conscious that we had a bit of freezing there, so hopefully with a live demo we don't have freezing when Christian's showing the product live as we speak. Katja, I'll pass over to you. Thanks.
Thank you, Jan. Thank you, Christian. Welcome everybody. My name is Katja Vogel. As Jan indicated, I look after products and marketing at Damster. And it's great to see so many people online today to hear more about the launch of our strategic pivot, the Enterprise Protection Platform. Christian, if you could go to the next slide, please. I'll be covering today the strategic rationale, and then look ahead into the future in two blocks, the immediate future and looking further ahead into the next 18 to 24 months. Christian, if you could go to the next slide. As we've just indicated, we are a global provider of enterprise solutions today. To summarize, we are currently in 11 countries and represented in 15 verticals. Traditionally construction, mining, more and more expanding into energy, utilities, and more recently healthcare and food and beverage. And really the success of our solution is demonstrated by this ever increasing geographic footprint. Now our solution is found in the UK, Holland, even Antarctica, Hong Kong, Singapore, Philippines, and most importantly, the US. If you could go to the next slide, Christian. Today, we partner with more than 670 companies and keep over 680,000 workers safe every day. That means we conduct around 250,000 drug and alcohol tests every day, every month, to keep workers and workplaces safe. And our platform sends out around 110,000 safety alerts every month to keep workers safe. If you could go to the next slide, Christian. What is new is really in our offering is the breadth and the depth of our solution. Our range is across workforce management, learning, access control, safety, assets, and analytics, and it's all integrated into one solution. It's also, this offering on a modular basis has been expanding rapidly over the last year. Just to name a few, we've added contact tracing, solo, skills matrix features, fever detection, incident management, plan mobilization, and it's ever growing. Now, what's quite important is these modules are designed to either function individually or orchestrate.
Gotcha.
Sorry? or orchestrate seamlessly into a integrated offering. And really this offering makes us what differentiates us from the competition today and makes us a global leader in the field of protection. If you could go to the slide, Christian. Christian, if you could move to the next slide. I think there's a delay maybe on the line.
Tell me when to go to the next slide. I've lost all audio.
All right, please go to the next slide. So protecting organizations, Damster, we have been one of the first companies to successfully deliver a technology solution for enterprise-wide protection. And so I wanted to focus a little bit today about what this strategic pivot to the enterprise protection platform is about. In one sentence, it's about a comprehensive approach to protection. And if you go to the next slide, Christian, please. What we are targeting in our enterprise protection platform is the key areas of investment. This is people, places, assets, and information. And as we know, these are the areas of investment that attract the largest risk for organizations today. Christian, if you go to the next slide. Protection is our mission. And really these four key areas, in all of them, we focus on protecting organization from what we see as unnecessary risks, but also unforeseen. And we do this by helping our clients to ensure that people are prepared, workplaces are safe, assets are connected, and information is accessible to create zero harm environment for our clients. If you go to the next slide, Christian. Most importantly, the Enterprise Protection Platform, or EPP, is positioned in the enterprise software stack. So it sits alongside some of the very famous names around financial health, Oracle, in computing, AWS, in relating to customers, obviously Salesforce, and from a human resource perspective, Workday. We integrate seamlessly with all these platforms via our open API infrastructure. And in going forward, we'll be leveraging the information across all those platforms. And we're working on creating the Damster Protection Index. And the intent there is to set a global benchmark for best practice in protection. This will allow us to determine how safe and protected organizations are compared to global standards. And you'll hear more about that in the near future. As Jan said, our clients have responded extremely favorably to the launch, and they see us now not as a single point solution provider, but an enterprise solution provider, and we'll intend to build on this positioning over the next couple of years. If you go to the next slide. Integral to the enterprise protection platform is the Demster Hub. As you can see here, it's outlined on the screen, and Christian will share more about this later. It's the one place for our customers to access our orchestrated solutions. And as you can see, various products and modules contribute to various of the key areas. So if you look at workforce management, learning management, virtual reality combined to ensure prepared people, access control, digital forms, incident management, and solo ensure safe places, asset mobilization, RFID and IoT combined ensure connected assets. And lastly, reporting is obviously critical in the accessible information stream. Now, all of this is available to our clients today in one platform and one interface, and Christian will spend some time on this in the demonstration. Christian, if you could go to the next slide. Now, looking ahead on what we are currently working on. Christian, if you could go to the next slide. This is a high-level view of our roadmap, and with an objective to deliver on this vision of a comprehensive protection solution. One of our core streams is the EPP Hub, or the Demster Hub. The key focus there is to continue to build deeper, intelligent integrations across both the web and the mobile platforms. Prepared people, we are focused on enhancing the user experience of our worksite users, of contracting companies, and create predictive learning environments for all our users. Christian, if you could go to the next slide, please. Safe places or workplaces is very much about solo and driving innovation around algorithms for fall detection, heartbeat monitoring. And again, Christian will demonstrate some of those functionality later, and driving deeper and deeper integrations of digital forms, and Damster Safety, our incident management platform, which again, Christian is going to showcase a little bit later. In connected assets, it's all about improving the user experience of companies that mobilize assets to site and monitor those via RFID and IoT. And in accessible information, we are strengthening our offering in the out-of-box reporting area. We are also working on self-service reporting, and probably most important going forward, configurable dashboards that allow us and our clients to monitor organizational protection levels. If you could go to the next slide, please, Christian. Looking further ahead into the next 24 months, we have committed to building the future of protection. And obviously innovation is at the core of this. We're working on workflows and workflow engines, as Christian said, safety algorithms, AI and machine learning, really with a focus to predict, but ultimately prevent safety risks and incidents. And if you go to the next slide, Christian, please. What we've mapped out here is an example of a safety process that historically has attracted significant risks and incidents for organizations. It's working at heights. What we've tried to map out what this process will look like in the future. And what you can see here, workers enabled with our solo product, when entering a zone that is classified as working at heights, will be checked to ensure that they have the qualification and skills to work at heights. And only workers with those qualifications will be able to access these high-risk zones. Fall detection algorithm will assess if a fall might have taken place. And if the fall is significant, the algorithm will be able to dispatch a medical team, will notify the supervisor, also will trigger the supervisor to complete an incident management form in our safety solution, can assign corrective actions automatically, for example, reassign training for the crews that are working at heights, and can trigger secondary processes around incident sign-offs across the organization, reporting, and, for example, claims management. Now, this enables all our products to play together in one flow. Christian, if I can get you to get to the next page. All of this is made possible by the digital transformation of safety processes. Today, most protection and safety processes are disconnected and very much manual. And with the introduction of workflow engines and in embedding artificial intelligence at the inflection points between process layers, we will be creating a future where safety risks can not only be predicted, but also prevented. And as Christian said, it's something we are very focused on at the moment to drive those developments. Christian, if you can go please to the next slide. Looking at our journey towards AI-driven protection, as you can see, it will significantly increase again the breadth and depth of protection. We'll be looking at for people, predictive scheduling and training workflows for workplaces, geofence, zone-based protection based on skills and qualifications, predictive asset allocation and optimization, and generally AI-driven risk management. And Christian, if I can get you to go to the next slide, please. Now, none of this would be possible without a strong technology foundation. And Christian, if you could again move to the next slide, please. The foundation for the enterprise protection platform is very much our ever-expanding open API infrastructure. It facilitates all the third-party integrations that we can offer. It allows us to embed AI and machine learning integrations to automate safety processes. This will allow us ultimately to deliver a data-driven protection platform, which will set the standard for protection globally. And on that note, I'll be handing back to Jan for Christian to, I guess, showcase the platform today. Thank you.
Yeah, thanks, Katja, for that presentation. For shareholders that have been with us for a number of years, you would see the fundamental and material shift in our business over the last 24 months. And I think Katja summed it up well by, in the past, we would have been perceived as a number of interesting single point solutions, and we're really shifting our product in terms of providing a platform solution, which either a client can take the whole package or can take individual modules. But the key is also making it easy for clients to understand. I will use the word protect your world. I will use the word enterprise protection platform, as you need to capture their imagination in the first couple of minutes, and then you can drill down. To give it real life, I mean, most investors look at slide packs or look at websites and have a view of a company, but I think the most powerful representation of any company is actually, can they present their products live to a group of people? And Christian, our CEO, will now do that. And touch wood, Christian, we don't freeze. So I'll pass it over to you to give all the people on the call a journey of our products in a live sense.
Yeah, thank you, Jan. Apologise. So I'm actually showing you our, and what we can see at the moment is we have 8 permanents and 4 contractors on site right now, and we can actually zoom into any of these locations. And this is actually our original Singleton office here, and have a look at who is in that actual office, right down to a footprint location. So we can say, okay, who's actually just in that physical location at this point in time? And we've got 4 permanents and 1 contractor in that location, and this is who they actually are. Now, each of those people have come to work today, and they've had to log into this site. Now, one of the ways they can log into the site is by using a really quick facial recognition system that not only logs you in, but takes your temperature. And that allows us to make sure that everybody not only is on site, they have the right skills, the right training, the right compliance. Now, from there, what we've actually done with each client is mapped out every single skill on their site to work out what it is you need to do that job safely. So you can see here, if you want to be a bulk delivery driver at this location, you must have a current heavy vehicle driver's license, evidence of internal training, and an induction as a delivery driver. Now, all of these documentation and item requirements can be provided as physical documents. They can be e-learning through our Damstra learning platform. or they can be evidenced on site through our paperless form platform, which we'll see very, very soon. So we saw before that we had a number of people on these sites. We can actually keep drilling down from there and have a look at how many people could work on this site at any given day. So right now we have 331 registered contractors, but only 86 are active. The difference between the two is that things have expired, whether it be their driver's license or whatever the requirements are to get on that site. So you can see all that data in real time. We could see that we had a number of people on site right now, and we could see who they are. We can actually go into their physical profile and have a look at that individual. And from there, we can see their skills, their training, their competencies, all of that information with the click of a button. We can actually go in and have a look at attachments. Everything's been scanned and uploaded, and everything here will automatically expire people's access to site as need be. So not only do we have that information for our own employees, of course, we talked about contractors. So every contractor company who is arriving at this site also has to register. So we have their insurance policies, their documented training, and all that information on file. So we can have their contact information, their employee details, everything is segregated right down to an individual level for every single person who accesses those sites, which is really what the enterprise protection platform is about. Now, if we keep moving through here, because we've had people working on those sites, part of protecting people is obviously fatigue and payment and excessive hours and all of those types of things. We're able to very quickly that during this date range, we've had 12 people do 1,327 hours across 182 shifts or 364 calculated work days based on the formulas you've used in your actual report that you've run. That's really handy for our customers to be able to take that information and use it to verify against their invoices and all those types of things that are coming in from their contractors, as well as do their statutory reporting back to the relevant government bodies that they may have to report to on their lost time injury frequency rate and all of those types of things as they're moving forward. Of course, we have lots of different reports you can run. This is just a very quick system summary. So we've had all of these people arriving at this site and they've been logging in and logging out, and we refer to those as punches. We've had visitors come in, which is people coming in to have a meeting and just say hello. They log in with a touch screen and go through all the same checks that are normal.
Christian, you're frozen. So investors, so has happened with these things on Zoom occasionally. You're frozen. So Christian will rejoin us shortly, everyone. So.
Yeah, did I just drop off?
Yeah, you dropped off, Christian. Yep.
Okay, back now. Sorry about that. I'll get that screen share back up. Wait me a second. Should be coming back up now.
Yep, you're good, Christian.
Okay, thanks, Jan. Apologise for that, everyone. The internet's not doing us any favours today. Excellent. So as moving forward, we're now on site, and I put on my watch or my wearable or my mobile phone in my case, as I'm demonstrating here. And I'm able to select a check-in profile. And in this case, I've said I want to check in every 12 hours. The reason I've said that is because I'm doing a very low risk task, and I just want to make sure I'm safe, but I also want to make sure that if I have a slip, trip or fall, during that period of time, that it's going to notify somebody. So you can see that I'm logged in. I've got 11 hours and 12 minutes left to my specified check-in time. And I'm sitting here. If I click on my name there, you'll see that I'm checked in, where I'm located, where I've been moving around. And I can actually fire off an alert at any time that I like. You can see on my phone, it's just come up, I'm about to alert. And when that alert comes through, it will actually alert the control center that I have a problem. And there's the alert raised there. Now, at that point in time, the control center can contact me and say, are you okay? We notice you've had an alert. That could be that I've had a slip, trip, or fall, or my heart rate's elevated. And of course, I'm going to say, no, everything's good. I bumped it by accident. And they're going to clear that alert out. Is set up there. You can see very quickly, I've checked back in there. My phone has dropped off the sharing. And we're able to track that person in real time. I'm just going to get my phone back up so I can show the actual drive component of Solo. I apologize for this internet. The other things in the app, of course, is driving. So when you've got the app and you're out in the field and you're driving around, we're able to track your driving, and you can see it gives you a score out of 100. Here's one that I actually went out and set up. So I drove 11 kilometers for 12 minutes and I had 6 events. And if I click on view events, what will actually happen here, it will tell you that while I was driving, I used my mobile phone. I did a hard turn. I did some hard braking, no speeding and no hard acceleration. All things I shouldn't really be doing while I'm driving. But what's that actually doing is actually measuring all that. And it's setting you up with a driver report and a leaderboard. So you can actually start to compare yourself against the rest of your workforce. And it becomes quite competitive where people want to be the leader when it comes to driving in the organization. So it's a really powerful tool to help drive the safety across your organization, not just on site, but when you're driving a vehicle anywhere in the world. Back over to the hub, and we'll see here on the hub that everything is integrated like Katja was talking about. So in the hub, we've got our ability to go into health and safety, and we'll skip forward a bit and I'll come back to the phone in a minute. And we can say, well, we've had a safety incident or a hazard. So we can actually launch straight into Damstra safety, and it's just loading. And in Demster Safety, you can see lots of dashboards and graphs and all those types of things where we can actually go in here and we can go in and look at our governance. Give me a second. My phone's decided to play games again. So we can go into our governance section. We can go in and look at process reviews, for example. Sorry. Our quality system. So we can go in and look at our quality system. We can go in and look at our risk and we can put our risk events in. So when we're looking at our risk events, we've got being hit by moving objects, other materials or substances, exposure to mental stress. All of those types of items can go in as risks and events. And from there, we can track all of that right through how you're managing that, what the actions are, right through to the compliance. You can do site inspections. So you might have done an inspection on the head office at Wellington or Christchurch. We can go and look at assets and people, and you can see that we can manage every single part of the safety process end to end. So not only keeping you safe to get to the work site, but when something does go wrong, how do we manage that? How do we work with that? And how do we make sure that all of that is dealt with in the one platform? So that's the safety aspect of the platform. But I'll go back to the phone, what I was saying before. We're out in the field and we want to go and do a safety observation on someone. So we pick up Damstra Sam on any mobile device and create a document. I say supervisor observation, can go in and say, that's the observation form I want to use, choose the worker that we're doing it on, can go in and put the location in of where we are in time. And then you've got yes, no questions, you've got multiple choice, you've got signatures, you've got photos, the ability to add video, all of those types of things, all within the form that can be customized and set up by the customer. From there, once they've done that, rather than going through into the form, we can actually see one that we've done previously here where we've gone through and we've completed the full supervisor observation form. And this form was done against Kacha, one of our employees who is on the call today. And you can see it turns it into a nice, visible, readable PDF. And all that metadata is searchable as well by the system. But what it actually does is it actually flows all the way into the profile. So that supervisor observation, if I go to Kacha's profile back in the main system, will all be in here visible and able to be seen by the relevant authorized users of the system. So if I go into worksite skills, you can see here, here's the supervisor observation that we did on the gantry crane, came straight from our SAM system, and there's a copy of the actual PDF that we just did on the mobile phone in the field, wherever the person was located in real time. So we're able to track those observations and of course, measure what has been done and what hasn't been done. Now, of course, we can go straight into our digital form system from the hub. So it's not only on the mobile phones, we can go in and manage who can use the digital form system straight here through this interface, who's active and who's not. But we can also go into the actual digital forms management itself and get an internet error. So I do apologize for that. But what we've seen is how everything is fully linked right through from every separate module, whether it be solo, learning, paperless forms, skills and competencies, site access, and everything coming together into that one enterprise protection platform. Yeah, and I think I'll pause on the presentation there and hand back to yourself. Thank you.
Thanks, Christian. I mean, we do apologise for a couple of intermediate hookups or pauses during the internet, and you take a risk sometimes when you go live, but we still wanted to do it live even if there was a risk. But I think that gives a flavour and also shows the power of what we're doing and where our products can have actually come. We're going to move on now to North America, and we have Bryce Elliott, VP of North America, and there is he popped up, Bryce. And I think Bryce, I think you're California today or Arizona today. That's where he's located. So Bryce will do two parts. We were going to have one of our colleagues in North America there, but he was in Mexico and the internet connection wasn't working too well. So Bryce will talk one about North American strategy and also what he's driving our sales process. And he'll also talk a little about the enterprise protection platform from a North American perspective, what clients what feedback they're giving him in terms of the positioning of our product. So Bryce, I'll pass over to you.
Thank you, Jan. Yes, my name is Bryce Elliott. I joined last September as a sales VP. I've got over 30 years experience in the software business doing this. And if you could pop up the first slide, I can't see if it's up yet or not. So when we joined last September, obviously the US market is substantial and a real opportunity for Damstra. We quickly analyzed our existing customers across the globe and compared that to the US market. And we were able to identify in profile literally thousands of target opportunities that we tried to limit by the industries where we're proven, as well as understanding the market and where the opportunity was. As the first sales hire, working closely with John Mattei, we also decided that in parallel with launching a direct sales organization, we should aggressively pursue business partners, which I'll talk about in a minute. The feedback from the business partners was really helpful because what we learned was the United States is no different than the rest of the world. A lot of what Damster provides, they're still doing manually. And those things that they've automated are highly fragmented across lots of different solutions from lots of different companies. The other thing we learned is that the US isn't quite as regulated in some of our core industries like construction and mining, which frankly surprised me. But those regulations are growing in our country, and Damster comes in with solutions that have been available for 10 years, but nobody in the United States knew they needed something like that because the regulations are only now accelerating beyond where they've been pretty steady maybe the last couple decades. The products that we have to offer are significant, and the opportunities that we're chasing range anywhere from $1 billion size organization all the way up to the very largest. Next slide, please. So in the last 6 to 8 months, we've been able to develop relationships with a number of different influencers in our market. Some of those are targeting large opportunities in the government that we're now actively pursuing. Some of them are your traditional consulting companies, systems integrators who are focused on the EHS industry and have provided us feedback that really no one's doing what we're doing from an enterprise protection platform perspective, pulling together all the solutions someone might need, but also providing an integration framework so that we can connect to the third-party tools they may already have in place and not necessarily want to replace, so that we can orchestrate across our own technologies and solutions, as well as the third parties that they may already have in place. Of course, analyst communities are important, and we're investing time in those. We also have some products within our portfolio that lend themselves well to pure reselling, and we should see tremendous growth in that area as well. One of the other organizations we're connected with is the Security Executives Council. And one of the things we're seeing is that the whole safety and security industries are blending together. And these security executives are chartered with back to work strategies as people come back to work, as well as supporting the duty of care for people who continue to work from home. So we're working with all these different organizations to move more quickly to create Damster visibility in the North American market as well as EMEA. Next slide, please. So one of the things I like to say is that you can't manage revenue while we have very clear targets that we're going after. All you can really do is manage activities. And we needed to focus on doing that and doing it quickly in our market as we build these relationships with go-to-market partners and launch a direct sales organization. Last year in the fourth quarter, we started hiring, we acquired a bunch of tools, and we built the process, developed the content that was appropriate for attacking the North American market, as well as EMEA. So we were able to access the right information about the right personas and the right accounts from Zoom Info, populate tens of thousands of those people into Salesforce, put a platform in place and a business development function that would increase the number of touches we have in the market, and then create compelling messaging and see what was working in the market. And it was all about getting that first meeting, that opportunity to introduce Damstra to these major corporations. In March, we hired our second business development person. So we have 2 people pounding the market, and on a monthly basis, they're doing 50 to 75 LinkedIn contacts, 500 to 600 emails, and over 1,200 telephone calls on a weekly basis. And now we're averaging about 2 net new meetings a month. Now, obviously, the partners, analysts, and marketing activities that we have going on can leapfrog all that heavy lifting that we're doing with the direct sales team and get us into these meetings, into these opportunities more quickly. But the results are starting to happen. Next slide, please. In just the month of March, we held meetings with this profile of companies. Now, obviously, it leans heavy towards mining because we have such a strong presence there and they have a huge need here. We also have some other construction companies that we're talking to. You can see we're expanding into other markets. Of this list, all of whom are active in our pipeline, there's a couple that I'd like to point out. Because many of the companies that we're calling don't have an active project, but they're intrigued with the enterprise protection platform messaging. In fact, every company pretty much aligns with our point of view, which is if they could run their entire business on ERP, that's exactly what they would do. But the fact of the matter is there's specialized parts of their business, like Katja said before, like supply chain management, product lifecycle management, customer relationship management, that ERP wasn't designed to do and will never do. So those platforms coexist in the enterprise to help them manage the specialized parts of their business. There's never been one in the health and safety security arena before, and we're positioned there. And because we're making so many phone calls and so many touches in the market, we're able to surface people who are in active projects, and two come to mind. One is a $3 billion company. They had just started looking for a solution. They were looking at some of the larger providers that don't have the integrated platform we have. And we have a substantial opportunity in just the last 3 weeks for workforce management, integrated e-learning, digital forms to be deployed on 4 continents. We have another opportunity with a little bit smaller company, more in the construction industry, that has that same set of requirements, plus asset management and Damster safety. So we're really pleased with this high activity model that we're doing as we grow our go-to-market partnerships, and we're starting to see results. And that's really it for me from a quick update perspective on what we're doing in the US, North America. And now some of those activities are being targeted in EMEA as well, so that we can more rapidly grow that part of our business.
Thanks, Bryce. Going on to our US advisory board, we did announce a while ago the establishment of an advisory board, and that was really to assist myself and Christian and the broader executive in terms of how to accelerate penetration into the North American market, but also think importantly how we position our product, how we look at strategy partners or partners in terms of accelerating growth, and also how we talk about our product in the US context. Obviously, we have clients already in the US and we're winning a few smaller ones. So the insight of Tim, Ray, Pam, and Raymond, who all are the senior executives in terms of what they do, and specifically chosen because of their background and the verticals they play in. We're glad to join Damster and the advisory board and have been actively playing a role with us. So we have Tim Davis on the phone today. The photo on the slide pack has him with a beard. He hasn't got a beard at the moment. I mean, Tim, just introducing yourself. I mean, I think it's 2006, you joined Workday, so you've been there for a long time. And if I look at your CV, what you achieved there was, I think there was no revenue or not much when you joined them. I think you launched the major account strategy. You launched the financial products. You brought the Workday student product to market. And before you're at Workday, you're at places like JD Edwards and PeopleSoft. So, products and companies that you work with and Workday that Australian investors, I think, look at and admire and benchmark themselves against in terms of how Australian companies can replicate what a Workday do. So, Tim, I'd ask you a question. I mean, from your experience, what can Damstra learn, and your time spent with executive and looking at the product, what's been your reflection for the investors on the call today?
Yeah, hey, thanks again for the opportunity. I think there's an opportunity here where, especially in the North American marketplace, when Workday started, there was no customers, there was no revenue, and what was interesting about that time period was we really needed to identify and the persona and the profile of who the buyer was. And I think sometimes when we get comfortable with where we've always gone in the past, and I think if you look at how Damster has approached the Australian marketplace, and what I've talked to John and Bryce about is what about if we flip that around? What if we look at things differently? What is it the same buyer? What is the profile of that buyer? I mean, we had it down to, we knew the profile, the type of role that person was in, the age of that person, and because we knew that if we could get to those certain people that fell within that profile, we could find a buyer that had budget, and that those were kind of the criteria that we went into. And so I think there's just that mark of making sure you're not just complacent with the way that we've done it in the past, right? And I think that's the real challenge we have when we look to move into a new market. We look at what we did it this way and it worked here. Let's just continue to do that. And what the model at Workday was, we called them the sins of the past. And so we put together a list of things that we identified as those sins, and we try to operate 100% different than that which we believe was a sin of the past. So I think those things, those lessons, as we go into North America and with a constant challenge of why we're doing it this way, looking at the presentations, looking at the buyers, the profiles, those things are all things that we need to dig into and really make sure we know.
Tim, thanks for that. I'd ask a question. So why did you, apart from the relationships you had with some people at Damstra, I mean, why did you actually join the advisory board of Damstra?
Yeah, I mean, if you think about what Workday does, right? There's we're the core system of record for worker, right? Now with millions and tens of millions of workers in hand. But if you look at what we're tracking within that, it's a static point of data about that particular worker. It really doesn't cross the line to actually go into the workforce itself and really look at things like, are we protecting those people that are working at those organizations? And that's what's very interesting about Damster, is that it's a continuum of Workday past that transaction or that data set on the worker itself. I mean, we may know the last time he's done his updates for his certifications on different machinery and licensing and things like that, but we're not getting into the level of that we've just seen today, of the detail of the information and the type of systems that really are the things that are keeping our workers safe, right? We're going to be able to help you understand the kind of the health, safety record of that employee, but are we really helping that worker stay safe in a workday? No. That's the kind of where I see the continuum, and where it was exciting to me. When I was at JD Edwards, I did a lot of work with construction, and it was that system of record that was within the job site that was so important. JD Edwards did a great job of capturing the transaction of the job, the cost center, and all the information related to it. But again, JD Edwards didn't cross that line into the actual performance of the job site. And I think that's the really compelling argument that was exciting to me about Damstra.
Tim, I like your comment about Workday being static and Damstra being live, and then you could actually see our products, how they work next to each other, albeit Workday is obviously a global leader in terms of what it does. Just your view on, you would have saw, and these questions, mind you, I haven't prepped Tim up, so these are all cold. You saw Kutch's presentation on EPP and Protect Your World, and you've been guiding us in terms of trying to use catchwords. So what was your view on, Kutch's presentation on the way we've positioned EPP and also the way Christian shows it live? Is that something you believe customers and clients in the North American market can actually grab onto and understand?
Yeah, I think yes, absolutely. I think you have to overcome, when people ask me kind of what is Damstra, I said it's the stuff you saw in a Tom Clancy movie, and I don't mean it in a negative way, but it's so amazing to what the things that you guys are able to do, and look at a job site and say who's there and what's the temperature of those people. I mean, it's kind of the feeling of I can't even think of it. And if these were prepped, I would know the name of the movie, but there was a movie that Tom Cruise was in where he has his board and he's moving things around on the board and things are flashing up as he's watching that board. He's an investigator. That's what I see Damstra. And I think that the biggest challenge for people is that it's such a leap that you have to kind of slow down, because there's so much difference between the static state to which companies are operating in today and the level of change that you're going to accelerate them into. But without it, they're just going to, they'll never catch up, because the acceleration gap between the change is happening so rapidly right now because of technology, right? I mean, there's a book called Clock Speed that is a great book. It's an older book, but it basically says that anything that's been done in the past will be done twice as fast the next time and the next time and the next time. And so you look at things like that Damstra and EPP are doing, everybody else is going to be trying to catch up to it. But by the time they catch up, Damstra is already going to be moving up to another next clock speed, to which is going to be twice as more innovative and accelerated as far as widening that gap between what you're doing and what your competitors are doing.
Tim, the movie was a Minority Report, Tom Cruise.
That's it.
Yeah. And we'll have to, and this is a fire chat, everyone on the call, so it's a bit more casual, but I'll have to tell Katja that she's got to think about using the Tom Clancy vernacular in some of their marketing materials. I do like that also. Tim, a question about, obviously we had some success in North America with Newmont and had a global contract there. And I know Workday, when you target markets, you look at, your definition of small is 5 to 10,000, mid markets 25,000, and Workday really targets, 100,000 seats in terms of global contracts. But I was just, if you give the people on the phone call, what's changed in the US in the last 6 months? I mean, Australians are here, watch TV, and obviously we knew what happened with Donald Trump. We see the vaccine rolling out. There was a big issues at Black Lives Matters last year, which still continues. Has the economy and the feeling and opportunities for companies like Workday and Damstra changed in the last 6 months from your perspective?
Yeah, I think I don't know if it's changed in a way that would effectively, from a conversational standpoint, you look at what the market Damster is going after, and in the US, those markets have been categorized as essential workers, right? And so they were never shut down because the unions in the United States were so strong that they just couldn't shut down highway construction or building or mining. And so all of those workers were viewed as essential workers. I think what you're going to see is the support teams around those essential workers, those people that are back in the office supporting those workers, may or may not ever go back to the office. I have a lot of friends that are in commercial building here in the United States, and they're working only where it needs to be from a collaboration standpoint with the client. They're getting together, but the things around them that are related to health and safety, those administrative people, they may never go back to the office. And so I think just the idea of the collaboration of the systems that Damster has built kind of fits to where we're going to end up as an economy here in the United States. I know that Workday, I don't know where we'll end up. I know we have a large building that we just built on our new campus, and that'll be the first building we'll open up come in September. But even with that, it's not going to be force you back to work. It's going to be, say that we're open back up. It'll be interesting to see as groups move back in these types of technology development, non-essential workers. where those workers will end up, if they'll actually see the type of office utility utilization that we used to. I don't see it as much as it was in the past.
Thanks, Tim. No, they're all the questions I had. Did you have any final reflections for the 100 or so people on the call from your perspective? Because then I'll just move to general Q&A. So
no, I'm good.
Okay. As you can see, when we have advisory board members, it wasn't something for the optics of looking good. You can see that Tim knows our business, and we're taking his counsel and has his views, and obviously Workday's one of the great success stories globally, and we're leveraging that too. And we're so glad that Tim's always happy to share his time and his experience, and hopefully he doesn't take all the things he learns from Damster and puts them back into Workday. But anyway, we'll see what happens. Anyway, for that, and Tim's smiling as I speak. Thanks, Tim. I will move. We're actually a bit ahead of agenda, and we have got a number of questions. So I'll moderate these questions. I think I've got about 15 so far. So I'll just group them. Bryce, one for you. You have a lot of customers on your list. Are any of those you believe will convert in the next quarter? And if you do convert them, will they have to be on a site basis, or will it be on a multiple site basis?
The subcontractor company I mentioned really doesn't have sites. They work all over, and they're predominantly US based. The other company is a mining company, and it is a global decision that's fairly recent. So it would be a large global commitment and opportunity. Both of them are targeted to make a decision and buy something within the next 90 days.
Thanks, Bryce. Bryce, while you're on the phone, another one for you. How is EPP used in a recording studio?
That's one of the back to work white collar opportunities. Not something we started out targeting, but everybody's trying to figure out how are we going to deal with this. And there's a lot of concern over duty of care, as I mentioned before. So in the recording studio, it would be facial recognition, temperature checking upon entry. They also are looking at maybe tracking if someone's had a recent COVID-19 test. If they want to share their vaccine information, they can. In that particular industry, there's a lot of concern about keeping people anonymous and things like that. But we're talking to a number of companies who are viewing this current situation as potentially being around for a long time, whether the virus mutates or not. And so in 2020, we found people had a wait and see attitude. In 2021, it seems like there's a faction of the market that's decided to put measures in place permanently and just assume that this isn't going away.
Okay, thanks, Bryce. I have a question from James here. How is Vault tracking versus the $8 million revenue target? I think there's a couple. I'll answer that one. There's a few dimensions to that. We won't, as James knows and other investors know, we don't really comment about the ongoing performance of the target of the 8 million, which was done by the Vault board, but we're very pleased. I think what Q3 shows us, and James, you picked up this point when you're looking at Q2 result, was you're concerned about organic growth had vanished. And I think what Q3 has shown us, in particular with the user numbers, that organic growth right across our business has accelerated. And March has also accelerated. Vault we're very pleased with, but to be very clear, Vault is not 100% of that 66% PCP. So before, I'd say in Q2 we might have been firing on 2.5 cylinders out of 4, and I think in particular in March we're firing on 4 at the moment. That goes back to James asking another question about, in terms of our revised guidance, which we're pleased to put out in the marketplace after feedback from Q2. I think we're comfortable with the PCP running at consistent with these types of numbers. So at this stage, we put the guidance out there because we think we're going to hit it. And the underlying growth in some of the businesses, as I just said earlier, has really accelerated. In particular, mining has come back very strongly, and construction has come back very strongly. Chris, as CFO, did you have any other comments on that particular question?
I think that's correct, John. I think the fact that that our Q3 is up so strongly, and as you can also pick up in the user numbers in that little chart we did on the user numbers, all of that as any effects that we had from previous periods have now washed out. So we do expect Q4 to be strong as well, both including and excluding Volt.
Okay. Oh, Chris, another question for you from Joshua. He said, in the past, you disclosed net dollar client retention. That metric's missing. Why?
Joshua, yeah, good question. Thank you very much. It's not a number that's too volatile for us. So we've made a decision that we'll only report on it every 6 months. So we'll do it at the half year and the full year. But bear in mind, it doesn't change all that much between quarters anyway.
A question from Michael. 4C result, notice your operating cash was approximately break even, but you had investing cash negative. Is a capital raising imminent? And also you might comment on the debt facility that we've also just announced in our Q3 update, Chris.
Thank you, Michael. We do expect a couple of, well, I'll just start off with a few comments. So that cash burn, as we call it, is slowing down and will slow down over the course of the next quarter or two. So that's the first point to note. Secondly, to that point is we have reached an agreement with our credit provider, with Longreach. So that does give us a bit of flexibility to expand into, say, for example, the US and take other things off the table. So we will see cash burn slowing down.
Moving on to a different topic, Katja or Christian, question for you, modules. It looks like predictive analytics is a sixth vertical. There's two parts to these questions. What you showed us today, has this all been developed internally, and was it from Damstra or Volt? And a third leg of this, has this been achieved because of additional spend in R&D? Maybe one for you, Christian.
Yeah, thanks, Jan. Good question. Predictive, we don't see it as a totally new vertical at this point in time. It's part of our reporting vertical, our data analytical vertical, if you like. It has been developed in-house, and we're continuing to do that. It's certainly not finished. We have a long way to go, and we're very pleased with how it's progressing. It's a bit of a mixture of teams. There's certainly, Damster long-term employees and Volt long-term employees all involved in the process. It's not attributable to the acquisition or anything like that. It was certainly on the agenda well before that, but we're really pleased.
Christian's dropped out again, unfortunately.
Working done internally.
Okay. Christian, maybe for you again, a follow-up technology one. Can Userlink reporting shifts work to their time and attendance systems via API?
Yes, absolutely, Jan. We have a lot of companies doing that, contract companies as well as our actual clients. So very common that occurs.
Okay. Christian, while you're on the phone, another one from Ted, but a different space. How do we compare pricing of Damstra versus its peers?
Yeah, it's an interesting question, and it's actually not an easy one to answer. As we know, we don't have a direct competitor with all the different modules, and certainly no one in the enterprise protection platform space. But what we do have is some competitors in those single verticals. So when it comes to, say, Damstra SAM paperless forms, or it comes to Damstra alone, we've got lots of custom competitors out there in the field who we can use to give us some direction on where that's going. Where we sit in the price range with them varies. I mean, normally somewhere in the top sort of 20-30 percentile range. Certainly, we're not the most expensive, but we're not the cheapest. But we only really benchmark against those individual products. When you bring it all together as a platform, there really is nothing to benchmark it against.
I think, Christian, too, as you and I spoke about strategically, if you look at our paperless or workflow modules, it's interesting, the newer products we're bringing into our business, once they're integrated into the Damster core, we can actually price at a higher price point than the Damster core product, as an example.
That's right, Jan. People are willing to pay for the ability to have it fully integrated into the one protection platform because they're seeing the time savings that they're getting across their entire business, and because they can measure that, they'll pay for it.
Taking a different approach in terms of questions, and maybe it's one I can answer. A question on attracting and retaining talent. Strong growth in technology businesses coupled with limited immigrations resulting staffing pressures. How's Damster going on staff? It's interesting question. It's something we've actually spent a lot of time on, Ross, and we did, track our staff turnover on a rolling 12 months, and we're still relatively small, just 220 staff at the moment. Our staff turnover on a involuntary basis. So obviously, when we did Volt, we exited duplicate roles, so I'll exclude those. But on an involuntary basis, is tracking at about 15-17%. So overall, very pleasing. But what we're actually finding is 75% of that's in the is depths. There is pressure in terms of that. We're found in Australia, but also overseas, some institutions, in particular in the Australian market anyway, banks have been very recruiting very heavily, and we're seeing some movement. So we do have a core team in Australia. We do recruit. Our strategy is recruiting multiple cities, not just one. We do use the Philippines also to do certain components of work. And then we are also looking at India. Obviously, India as a country has its issues at the moment in terms of an option there. So at this stage, in terms of non-developers, in terms of marketing and sales, admin, finance support, not an issue. In terms of developers, yes, we have similar pressures to other companies. But we have multiple strategies to manage that issue. I'm not sure, Christian, if you had any other comments on that, but it's something we have been working on recently.
Yeah, and absolutely right, Jan. And of course, all the work we do internally around our employee retention strategies and all those types of things plays a major part, and about becoming an employer of choice. And of course, one of the things that we hear a lot when we're out in the marketplace recruiting people is, even though we're a growing organisation, we're still a relatively small organisation. And when people go and work for these big companies, the Googles and the Microsofts of the world, they struggle to be heard and they don't get that flexibility. And that's what we're trying to offer our staff, particularly in that development area. So we see that as a positive, and we'll continue to drive that, and obviously work very hard to retain staff. I think it's positive to say that the first developer who ever got employed by Damstra and the second developer who was ever employed by Damstra 15 and 20 years ago are still with us today, and we'll continue to try and achieve those types of numbers as we move forward, Jan.
Yeah, and that's a really good point. And Ross, just building upon that question, I mean, obviously retention tools, and it's not about stock and options too, it's about what people work on. We all know developers like working on new products, seeing the impact of that products to clients. So it's a function of what are they working on, and what we've found with our product range going broader, but always deeper in terms of our strategy. The developers get excited by it because they're seeing they're just not working on one thing, and they see when continue to launch new things to market. And we know developers love seeing something launched to a client and working. So money's one thing, retention's another thing, culture of the organisation's another thing, which we're spending a lot of time on. I mean, this is invested telecom. I mean, did board assessments last year. We did staff survey results. We've done proactive action around people. We consistently talk about how we're managing our people and what we're doing for our people. Flipping question. Question from James about users. Chris, did you want to talk about the user uptick of the 90,000 from Q2 to Q3?
The user question or the client question?
Oh, you could answer. You could answer both. You can answer both. Yeah.
All right. So, yeah. Sorry, I've just lost to go to the users question. So I'll just talk about the clients quickly, James. I think we probably miscommunicated that. Our churn was that small. And especially on a revenue basis, sometimes you see a little bit through the smaller products, but they don't actually add much to the overall number. So we just have to go and check and update that client number. We still stand, and the correct number is the less than the 1%. So just to clarify that. And again, as Jan made the point before, you only have to look at the revenue numbers and the growth in revenue numbers as your evidence for that. So just maybe a small error in the way we communicated that. We'll fix that up and send that through. In terms of user growth, so I might have lost access to the question, but a lot of that user growth was, in fact, it was pretty much across all the products. So we are pretty pleased with that. Or the ones that we intend to grow anyway. So SAM has gone up, Vault has gone up a lot as well, which is pleasing to see, especially on the silo side, as the call it the older Damstra businesses. So all of those products and users in those products are increasing.
Yeah, if I could build upon that, Chris, too. I mean, we're calling out new customers, and I think we put 100 on, and they're across our business. At the end of the day, a lot of people know we have top 20 clients, which account for a big proportion of our revenue. But a lot of these smaller clients, if you can put on, 20, 30 new clients a quarter, and we've done 100 so far this year, and you can do that year in, year out. Some of these clients will only be small, they'll only take a module, but some of these clients will then become larger clients. And some of these clients could be bigger clients. So I think the health of our business should be measured on a number of factors. One is the recurring revenue staying solid, which ours is your AAR increasing, and we've disclosed that for the first time, which it is your client churn low. Obviously, it's about new clients, which it is. So it's about that strategy going forward, and it's a metric we'll continue to talk about. Just changing tack away from the numbers. Tim, if you're still on, you still are. A question from Ross. Can you talk further about the parallels between how Workday evolved and how Damster is evolving? You mentioned not moving too fast for the customer is the key, but what are the 2 or 3 pieces of advice Damster to ensure its success in the US?
Yeah, I think the interesting thing is that it took Workday 8 years to get to 100 million in revenue, and it was a lot of work. And not to say that the next 8 years weren't a lot of work, but once we hit that 100 million, we went from 8 years to 4 billion, 4.5 billion. And so it's that momentum of getting the right customers, getting the right people in place, getting the right sales team in to carry the message. And I think it primarily starts with making sure you have the message strong, that the marketplace is hearing kind of that Simon Sinek, the golden triangle of why, how, and what. And I think you guys have done an excellent job of moving very quickly to adopt to that, and really honing in on the message. And so I think again it's one of these things of patience, right? You have to work, and that first 8 years it's just about developing and the stronghold, and we weren't chasing 100,000
people, companies. Our goal when we started was let's find companies that have 1,000 employees, and if we can get $10 per employee per month, or $100, and we discount it by 20%, we'll get $100,000. And that was, let's just find 10 of those. And then the following year, let's find that next chasm. Let's get to that 10 to 20,000 employee companies. We went out and found Lifetime and Chiquita and some of those others. And we had our real big break in 2008 when we signed Flextronic, and it kind of put us on the map as far as the big $200,000 employee company. But it really was a lot of work in that first 8 years to get that $100 million in revenue. So, there's nothing more or less about it. There's not a magic. I wish there was a magic pill you could give all startups, because then we could all just invest in early startups and move quickly into retirement. But it's work. That's all it is. It's hard work, and I think you guys are on the right track. You've got some really good leadership now here in North America. You got to hire up the teams and build that base of ARR that will, build upon itself over the next 8 years.
Tim, thanks for the reflection. I'm just reflecting on how you look at our company. And as you know, Christian and I bought this company back about 5 years ago. So while we say it's 18 years, we really see the company only started 5 years ago, and our ARR is a bit over 33 million. So that'll be a personal goal. Can we get our ARR, Christian, in 8 years to 100 million, and then we'll track the Workday experience, Tim. Anyway.
Absolutely, Jan.
Anyway.
Yeah, that's you think about it. Again, I think you guys have to wrestle with that message, and I think that was one of the first things I told you guys. You're not that old of a company, because you really started when you guys bought it, because you really took it a different place than it was. And I've got another company I work with in Austin, Texas, and they tell people they've been in business for 12 years, and yet they only have 5 million in revenue, but they sold 3 years ago, they sold the business that they had developed for 9 years to something else, and took that money and incorporated into virtual reality. And they've just exploded in the last 3 years, and they're on growth to be 15 million in the 4th year. But when I told them that there's no comfort in telling people who've been around for 12 years and only have $9 million in revenue, you really haven't been around that long. And you have to look at it and say, what have we done since we acquired the assets? And really the company became different 5 years ago.
No, thanks, Tim. Thanks, Tim. Bryce, back to you again, still on the North American flavor. Can you talk about partnerships and that were developed in the US, and do you think our advisory board will be able to help us in terms of those partnerships going forward?
So one of the cadences we're just kicking off now is we've identified 50 target partners through our research, and then another 25, which we pulled off of our direct competitors' websites. And so we're starting a cadence to actively recruit with a target of 5 or 10 incremental partners directly, using the similar methodology we're using to attack the market for customers. But absolutely, we've talked with Ray, Pam, Raymond, and Tim about companies that they know that they think can help us. So, we leave no stone unturned, and I can't emphasize enough how important that is. The last company I worked for was in the supply chain industry, and when I got there, we were really struggling to identify new opportunities to go chase. And we brought on 3 pretty substantial partners. One of them was a traditional Big 5 consulting firm. And today, that company, literally 80% of their new opportunities come from partners. So, we're trying to execute a strategy for both. So hopefully we can report back in another 90 to 120 days on how this campaign went, how many new partners we brought on board.
Thanks, Bryce. And I think another dimension of that too, maybe Christian, you might comment, is partners can take various forms. Like we have Technology One in Australia, but We're also partnered with Oracle recently, where we're going to be on their Innovation Hub in Australia. And I think, Bryce, also in the US. Where's the Innovation Hub in the US again with Oracle?
Yeah, it's just outside of the city of Chicago in Deerfield. They're going to open another one in Austin, Texas, and one in London. So we're working closely with them. We're doing a go-to-market in mining with AWS, and that'll also expand into some other industries. So it's not just SI partners, it's the technology platform partners as well.
Yeah, and I think Bryce makes a good comment about that, but I think people have been shareholders of Damster for a while. It just shows you where we were 2 years ago in terms of how our business has evolved, that we can actually partner with people like Oracle, or Tim is happy to sit on our advisory board and give us advice. It's something we couldn't have imagined 2 years ago. We're actually running ahead of schedule, which is unusual for these types of sessions. So if anyone has further questions, please ask them. I have another question from Ted regarding debt to leverage returns. I will say that the reason we put the facility in place was, one, we did have a feeling in the marketplace that some people were believing there was a capital raise imminent. We didn't want to be forced into that position to do that. We're lucky enough to have the financial profile where a number of debt providers were prepared to provide a facility like that at competitive rates with good flexibility in terms of covenants. Do we always want to have a debt facility? The answer may be no, but this gives us the flexibility for the next couple of years to decide what we want to do, one, to accelerate our growth or look at acquisitions, etc. But it means that we're not forced to do a capital raise in the short term. And I think someone asked a question about our cash profile earlier, and consistent with our growth and the synergies of the Volt acquisition now being upgraded, I would say from 5.2 to 6. Our original target was 4 and it's gone to 6. All that's coming together very nicely in Q4 and definitely Q1 next year. And we're looking very positive on net cash flow generation, just not operating cash flow generation. So I hope that answers your question, Ted. So are there any other, we've still got a number of participants on. I can still see 60 people on. So are there any other questions? While we're waiting on those, Christian, as CEO, I might let you do a summary closing while we wait for any other questions if they do come through.
Absolutely. Thanks, Jan. Yeah, look, I think the numbers really do speak for themselves. I think we've gone through that slowdown, and it was a slowdown for COVID. It wasn't something where things just stopped. It was a slowdown because the entire world had a challenge in front of it and had to work out how it was going to deal with it. I think we're on the back of that now, and there's still changes to come. There's obviously still regions around the world that we do business in that are still improving and getting better on a daily basis as the vaccine rolls out and those things occur. But what it has done is it has opened people's eyes to what can technology do for my company and what companies are out there that have technology that can actually help us. If you go back before COVID, we would never have had conversations with a recording studio. We'd never have had a conversation with a school or the education department. We wouldn't really be looking at rolling out temperature detection systems in hospitals and things like that. So it really has been an event. And I've always said an event is what really makes people decide whether they're going to spend money on a system or a product like ours. And I think this event over time will continue to reinforce the need to be tracking people, not only the people who are on site, but the people who are off site. I know Tim alluded before, and it's very, very true. A lot of people are not returning to the office, and they've got no plans on returning to the office in the near future. But that brings another entire new problem for those employers, because even though they're not in the office, they're still under the control of the organization. And that organization has to have a duty of care for them. And of course, we're very well placed with the likes of Solo and Sam and e-learning and those types of things to manage your workforce, not only on site, but off site. So I think the world really is our oyster. And I think we have assembled a fantastic team in the US, in Emir, Australia, and we're setting ourselves up for that growth profile. And I'm very excited about what the future holds for us, Jan. So that's my close out and my message to everyone on the call today.
Yeah, no, thanks, Christian. That's a good summary. I do have a couple of follow-up questions. Couple from Ross. See, you've done guidance again, but why didn't you do guidance on EBITDA? And I said, I suppose, Ross, question on that. When we didn't make comment in our last quarterly on guidance, the feedback that I got from investors was, the revenue was what people wanted visibility on, and then it was obvious in the 4C how we're tracking. I mean, we've been incredibly pleased our GM's expanded and able to hold an Ebitda margin of 20% while rolling through an acquisition. And for those that know Volt, I mean, Volt was burning, $5-6 million a year of cash, and we've closed that and overachieved that. And now that's flowing through. Obviously, in Q3 will flow more through in Q4, and then in Q1 we're looking very, very strong. So I hope that answers the question, Ross. But I think maybe you might be asking it that the numbers were so good on GM and EBITDA, maybe we should have called it out. So maybe we should have, but I think the numbers speak for themselves. Kofi asked a question on your SME strategy. Christian, do you want to talk about that? I will say, Kofi, if you look at the clients, like we've 100 new clients this year, we're actually doing it. But there is another leg to it down the track. Christian, do you want to talk to that?
Yeah, absolutely, Kofi. Thanks for the question. And SME, as you know, we've spoken about it for some time and we continue to do that. We are seeing success in some areas of our organisation, but recently we have invested in getting that SME strategy fully planned, documented and set up for success across the entire product range. That's undergoing that full review at the moment and is due to be completed by the end of next quarter, with the plan then to put the resources behind it, because it obviously requires a different marketing and a different sales strategy to our enterprise business. And we're putting that entire plan in place right now to make sure we can get the success off the SME side of the business that we've had with the enterprise side. So well underway. We are seeing some success, but we've now resourced it with the right people to make that move forward. So looking forward to that.
Oh, Christian, a question from Stella regarding temperature checking. Pest control products, in terms of how it's been a really interesting last 9 months on that, hasn't it? And you might even comment about the chart that you and I were looking at yesterday in terms of 200,000 temperature checks.
Absolutely, Jan. And Stella, thanks for the question. It's an interesting one. And the question was, as vaccinations roll out, etc., are we seeing demand for temperature checking and that decrease? And in the early days, I'd say, yes, we rolled out temperature cameras and then people thought they may not need them anymore. But what we've actually seen is the reverse. People are now seeing it as, and this is how we've been selling it as well, because it's 100% true, temperature is only a piece in the puzzle. And vaccination is also a piece of the puzzle as well. So it's not a matter of saying everyone's vaccinated, we're not going to have a COVID problem anymore. It's about saying everyone's vaccinated, but we're also taking everyone's temperatures. And the two combined give us a higher level of protection for our business than just having one or the other. So we've actually seen companies inquiring about adding temperature cameras, and we're actually selling more cameras. We've seen an increase in hardware over the last couple of months versus previous periods, which is fantastic. But what it means is people have had time now versus the early days of COVID, where there was a lot of panic buying around thermal imaging and all those things. Now they've had time to sit down, talk about sustainability, and how do I sustainability-wise keep my people safe in the workforce. And that is by doing many different things. It's about questionnaires. It's about making sure they haven't traveled overseas or they haven't been exposed. It's about temperature checking. It's about vaccinations and antibody testing and all those types of things. And all of those things combined create a safe work environment. Not any one of them create a safe work environment by themselves. So no, we're not seeing a decrease. we're actually starting to see an uptick, and hopefully that answers your question.
Christian, a question from Ross regarding the school verticals in the US.
Yeah, sure. So schools, we have had a number of conversations with schools. As you know, we ran out successfully at one private school, and then we started a few other major conversations. Schools have slowed down in the US, and the reason for that is there's been a lot of government legislation around what a school is and isn't allowed to do regarding temperature and all those types of things. We are continuing those conversations with some of the private facilities, but they are traveling along slow. So not a lot of rapid movement there at the moment, Ross, but certainly not an area that we're walking away from at the moment.
Yeah, a question from Bob asking what's included in Emir. That's just an internal term we use. That really for us, Bob, that's UK, and we've called out the scans control. But I'll be open. We've been working on that for a long time, but this time around, we've been told the decision we made in a couple of weeks. But I mean, Christian, you talked about that trial earlier, but it is going well, and we are in deep discussions with them. We do have a number of our products used in places like Belgium and the Netherlands, and I'm even delighted that our Solo product is now being used in the UK. So is Damstra safety. So it's that's what the definition of Emir is. And if you look at our global strategy, I mean, you've heard a lot about North America today. We do have a presence in Asia, in particular the mobility products, but also some workforce management products in Hong Kong and the Philippines. And there's some really good activity happening in Asia. And then we're anchoring our focus in the UK in terms of construction, because there is a big construction opportunity. And obviously the UK is slowly opening up with their accelerated COVID vaccination process. So hopefully that answers your question, Bob. There are no other questions. I'll give one more minute. I will say as chair facilitating the sessions, I found it useful, and I hope investors have found it useful to hear from obviously Christian, Chris, our CFO, Katja and Bryce, who normally investors wouldn't hear from, that run engines and parts of our business in a material sense. Both Bryce and Katja are senior executives in our group, and I couldn't thank Tim for spending a couple of hours of his time in North America joining our conference. And you can see the way Damster has had this advisory board. It's not by name. It's about adding value to our organisation's continuing journey. And I suppose my final comment: we'll always have people talking about our quarterly results and our end of Q4. But when I look at our platform and I look at our strategy, it's a multi-year strategy, and I think most people, when they look at the numbers, can see a number of positive attributes in terms of the underpinning of our revenue, which we believe will continue to go forward. So unless there's any further questions, I will close. I will say this is the last question, and I won't answer any more, but it's from Mike. Mike said, thank you, Damster, a very informative session. Great to hear from members of the team, and also great to get Tim's perspective. So that's from an investor, not a Damster employee. So I think that's a good way to end the Investor Day. Thanks everyone for joining. Bye. Hey, Ryan, can you go back to
Just trying to work out how to do that, Jan. Right? Is there a way to do that? I'm just still got a few people on here.
need to stop recording?
Yeah, I think, Christian, just stop recording and we can leave. I'll circulate a Teams dial in and we can catch back up on Teams.
All right, send it to me. Bye.